U.S. chain store sales this past week rose almost 2% from 1 year ago, but ICSC noted that consumers have little reason to shop right now, and basically what we see is what we are going to get for the rest of January. Week-to-week sales at the chains fell 3%. The three major jewelry retailers reported their Christmas sales comparisons for 2009 with 2008. And what is happening here with the data certainly reflects the new U.S. economy for this industry. Just for the record, Signet, Zale, and Tiffany do not have to report Christmas sales separately as public companies, but the information often hints to fourth quarter performance and earnings estimates. We, of course, are missing one retailer this year. Last year, Finlay, which reported $266 million in Christmas sales for 2008, was a major player that is no longer in the picture. Signet reported solid growth for Christmas 2009. However, after 2 consecutive years of declines for Christmas sales, the jewelry group is still behind. Prior to this Christmas report, Signet last reported a holiday season increase in 2006, at which time revenue rose 6% group-wide. Sales rose 7% this past Christmas, and that was sandwiched in between a 7% decline for Christmas 07 and a 14% drop for Christmas 08. Zale couldn't pull out revenue increases during Christmas 2009, but they haven't now since 2006. It is remarkable to see that just a few years ago, Christmas sales at Zale were approaching $1 billion. This Christmas sales were 45% of what they were 3 years ago. Sales were down 15% this time after dropping 20% in Christmas 2008, and that was after dropping 10% in Christmas 2007. Revenue rose 4% for Christmas 2006. To the higher-end retailer Tiffany, yes, Tiffany had a better Christmas than it had in 2008. However, total sales were still less than they had been for the November and December reporting cycle way back in year 2006. Look at these numbers. Single-digit increases were reported for comp sales this time, as was the case in 2007, but total sales this Christmas were a good $68 million less than they were in 2007. Clearly, though, what shines for Tiffany is strong double-digit growth coming out of Europe and Asia Pacific, the only exception to that growth being a little downward blip that hit during Christmas 2008. Lazar Kaplan will open an office in Ramat Gan and transfer a substantial portion of its polishing business to Israel. IDE's Avi Paz was very pleased, of course, and said the move was an extraordinary expression of confidence in the Israeli diamond industry. Revenues at Petra Diamonds for its first fiscal half rose 43% to $48 million as rough prices came back strongly during the July to December timeframe. Petra noted that consumer demand for polished from India and China compensated for weaker demand in the U.S. and Europe. Gross production grew 12% to 615,000 carats. Prices for rough rose by as much as 74% at Cullinan Mine compared with the first 6 months of 2009, and that mine produced 473,000 carats. Here is a look at how precious metals prices performed this past week. For all the latest industry news, be sure to visit diamonds.net.